Let's be real for a second. You hear the stats all the time. Something like 90% of traders fail. And you know why? It's usually not because they aren't smart enough. It's because they fall into the same handful of expensive traps over and over again. So if you're serious about being one of the few who actually makes it, you're in the right place.
So you want to be a successful trader by 2026? I mean, a really successful, consistently profitable one. Then we've got to cut to the chase and tackle the things that are most likely holding you back right now.
All right, so here's the deal. We're going to break down the 3 most common mistakes that absolutely crush a trader's account and their confidence. If you can get a handle on these, you will be light years ahead of the pack. Ready? Let's jump in. Okay, mistake number 1. This is a big one. It's that constant battle that rages inside your own head. It's the war between what you think should happen and what the market is actually doing. Yeah, this is the root of so much pain for traders. It's that little voice in your head. You know the one, right? The one that whispers, "Oh, this has gone way too high. It's gotta come down." Or, "It's dropped so far, there's no way it can go any lower." That's not trading. That's just guessing. It's pure hope. And here's the thing you have to burn into your brain. The market does not care what you think. Seriously, it has no idea who you are, what you hope for, nothing. It just follows its own trend, its own momentum. Trying to fight that? Man, it's like trying to swim up a waterfall. It's just not going to work. So, what's the solution? It's this. This right here needs to become your new mantra. You got to trade the cold hard reality that's right there on the screen, not the hopeful little story you're telling yourself in your head. Okay, so how do you actually do that? This little table right here. It's your new best friend. It makes things so simple. Is the trend clearly up? Cool. Your only job is to wait for the price to dip a little, that's a pullback, and look for a chance to buy. Trend clearly down? You guessed it, you do the opposite. And what if the market's just choppy and going nowhere? Well, the smartest move you can make is often to just sit on your hands and wait. Don't force a trade that isn't there. And before you ever click that buy or sell button, you have to run through this pre-trade checklist. It's non-negotiable. Ask yourself, 1, what's the trend? 2, where's the price getting stuck? You know, those support and resistance levels. 3, do I have a clear, textbook entry signal based on my system? And 4, be brutally honest. Is this a real trade or am I just gambling? If you get a clear yes to these, go for it. Any doubt at all, and you walk away. Simple as that.
All right, let's talk about the next big account killer. Mistake number 2. This one is pure emotion, and it is so destructive. We're talking about the dreaded revenge trade.
Oh man, we have all been here. You take a loss, and that hot, prickly feeling just washes over you. Your first instinct is to dive right back into the market to win that money back right now. But that's not a trading decision, is it? That's your ego talking. It's a purely emotional reaction, and it's a guaranteed way to make a bad situation 10 times worse. And this is what that downward spiral looks like. It's so fast. It starts with just one loss. No big deal. But then the revenge trade leads to a second loss. Now you're panicking. So you jump in again, and you get a third loss. And now you're doubting your entire strategy. By the 4th loss, you've blown a huge hole in your account, all because you couldn't accept that first small loss.
So how do you break this vicious cycle? It's actually pretty simple, but it takes discipline. The second you take a loss, your new rule is you're done. For at least 5 minutes. I'm serious. Get up from your desk, walk around, get away from the charts. Then, when you come back, the very first thing you do is open your trade journal and write down exactly why that trade went wrong. You turn that emotional gut punch into a valuable lesson.
And you have to burn this quote into your memory. You don't need to win now, you need to win right. Look, trading isn't a sprint, it's a marathon. Your goal isn't to make back one loss immediately. It's to make good, solid decisions over and over again for years to come. Focus on the process, not the immediate outcome. And that brings us to our 3rd and final mistake. This one is like the common cold for traders. Almost everyone gets it at some point. It's strategy jumping. You're scrolling through YouTube, you see some guru with a can't-lose setup and huge profits. And what do? Boom! System change. Or your buddy sends you a screenshot of a monster profit he just made with some new technique. So what happens? You drop everything and change your system again. Then some new, shiny, holy grail indicator pops up, and damn, another system change. You see the pattern?
every single time you do this, you're hitting the reset button on your experience. You never actually get good at anything. You're just a beginner, over and over and over again.
Okay, so let's stop the madness. Here's how you evaluate a system like a professional. First, you pick one strategy, and you commit to it. I'm talking 50 to 100 trades minimum. Second, you journal everything. Every entry, every exit, why you took it, how you felt. Third, only after you have that hard data, do you sit down and analyze it. What's the win rate? What's the average risk to reward? Only then can you make an informed decision. It's based on data, not hype.
Because here's the fundamental truth about trading. Finding a strategy that works isn't actually that hard. You know what's rare? The discipline to execute that strategy flawlessly, day in and day out, through the wins and the losses. Success isn't in the system, it's in your execution.
All right, let's wrap this up and put it all together. This is your path forward. If you're serious about that 2026 goal, it all boils down to avoiding these fundamental errors.
So let's review them one last time. The big 3 mistakes you have to avoid. First, stop trading your opinions and start trading the chart. Second, no more revenge trading. Just take a walk. And third, stop jumping from one shiny new strategy to the next. Pick one and master it.
And that brings us to the final, most important question. As you work toward that 2026 goal, what are you going to focus on? Are you going to chase the impossible dream of perfection from day one? Or are you going to build the rock-solid habit of consistency day after day? The choice is yours. Start building that discipline today, and you'll be on your way. Thanks for tuning in.